Right, hello and welcome to Camel Finance. I'm your boy, Camel. And today, I'm kind of just going to answer and address a few questions that I've been getting and talk a little bit about the idea that we could be seeing recessions. There's a lot of conflicting opinions about this. The reason being is simply that if you know me, then you know I don't like to force things, right? I could pretend it's the time to be busy. I could pretend there's loads of stuff to do. I could pretend we need to force a bunch of trades. But really, the trades are running, support is holding, long and strong continue to push, right? I'm not going to pretend like there's work to do or that we need to go modify in positions or anything like that, right? So when the market's going in my favor, the best thing I can do is sit on my hands and not mess it up. Okay, so we're kind of in that stage, as you'll see when we get to the charts in a minute. For now, I thought it might be interesting to answer a few of these questions, give a couple of opinions. Somebody tagged me in this, King of Swords, said, are comparisons like this completely useless or are they FUD? And I said, they're not necessarily FUD so much, right? It's just data. Data is data. So the white is the S&P 500, what we're doing now, and the red is the 1929 Great Depression crash. So to say this is FUD is kind of not true, right? Because it's just data. The white chart is what we're doing now, and the red chart is what we've done in the past. Charts are a reflection of human emotion, amongst other things. Doesn't necessarily mean it has to play out the same with the crash at the end. No. And in my answer, I kind of said, look, just because there's one of these fractals that suggests we're going to crash doesn't mean there's not a dozen or so others. And I bet half of them show a chart that goes up and to the right. So to kind of illustrate this point further, here's a bunch of fractals for you. Okay, the S&P versus 1971, you can see pretty much suggests that we are chopping around in this neighborhood. There's another one that says we got to kind of chop around and go sideways. These are outdated charts, by the way. I'm just showing you this as an example, right? But again, here we could have gone up only, up only, up only, up only, a crash, a sideways crash. And if you want a more contemporaneous set of fractals, then take a look at this, okay? Because this is relatively recent. This dates back just to the 12th of January. And you can have a look at these fractals, right? Here, it tells us to expect up only for a significant period of time. The same is true compared to 97. Compared to 2007, it says we're pretty much at the top and we got some chopping followed by some crashing to do. This here is the 1929, the red fractal I showed you at the start, which says, of course, we're going to have this huge meltdown. But you can see my point remains, right? For every fractal that you can find that suggests we're either at the top or close to the top, you can also find one that says we go up only for many, many years into the future. So again, data is data, facts are facts. There's nothing to really derive from it apart from, charts. They're not often the same, but they do rhyme, right? And that's all we're really seeing here. Does it speak to any one of these having more significance than the other? No, not necessarily. As ever, we take it one day at a time and see what the market will give, right? Alan wanted my opinion on this, so we'll have a quick look at this. Anyone arguing that a recession is coming this year is not following the data. US GDP growth was around plus 5% in 2023 and is due to expand again in Q1 of this year to around plus 3.4%. Inflation is still here. We had that hot reading this week, which is consistent with strong economies and persistent demand, and the employment market remains extremely robust. So whilst data trends as it is, risk assets should continue to play ball. And so, yeah, again, data is data, right? It is what it is. But for me, I don't think this encompasses the whole picture, and here is why. This certainly is true of the US, right? But what do we know elsewhere in the world? China is officially in deflation. We know this, okay? What else do we know? Well, as of today, the UK has officially entered a technical recession, okay? So that's another thing not to be omitted. Also here in the UK, right, we've got a pound at 1.25 against the dollar. We've got the FTSE at 7.5k, which hasn't actually moved in 20 years, gone completely sideways. Housing is at all-time highs and is soon to crater. I believe it's already topped, and I've been publicly short the housing market for some time. Meanwhile, inflation here is stuck over double the target. Buying a home, having a job in the UK is de facto long the pound and the UK economy. And Bitcoin is just 7k away from all-time highs. Wait, is this real life? Whoa! No, that's more than 7k, I think. Okay, we're about nine and change, let's say a little over 9k away, but just 22% from all-time highs. That is amazing. I'm laughing at myself because I only track things in dollars as a trader, right? Like I can't remember the last time I thought about a GBP chart for Bitcoin, but here you go. So, I mean, Bitcoin doing Bitcoin things. Man, do you realize the significance of this? One by one, it's just hunting currencies. And now this is the pound that it's about to take down. Like, man, we live in the most wild time. But I mean, this speaks to it, doesn't it? So yeah, fine, the US is doing okay. But remember, the US and the dollar, it's the fastest horse at the glue factory, right? It's like the strongest sick cow in a dying herd of cows. So it gets to benefit from that relative strength and the world reserve status. But you can see one by one, these other sicker, slightly weaker cows are all dropping dead. And so I personally believe it's a little bit misleading to only look at one data set and say, yeah, well, everything's fine. Yeah, everything's okay in the US. But elsewhere, we are starting to see cracks in the system appear. Not to mention, Japan has also slipped into recession, okay? And we saw Bitcoin make new all-time highs against the Japanese yen. I showed that this week. And Germany is almost in a recession. So, the cracks in the system are there. And one by one, it seems that either these have got to bounce out of recession and everything's going to be fine, or perhaps the US, like I said, is the fastest horse at the glue factory. It's also worth pointing out that this cycle doesn't make a lot of sense, because even though Japan has unexpectedly slipped into recession, this is what the chart looks like for the stock market, okay? This is the Nikkei 225. So, this is wild. This makes no sense, and I think this is why so many people have gotten this market wrong. If you're not a charts-only or highly skilled technical trader, then you probably got this whole market flat wrong, because the only way to get through this was to have good TA, good risk management, good ability to read charts, right? That was the only way to get through this market. If you were using data, if you were using macro analysis or trying to rely on logic, I haven't seen logic in these markets for years now, to be honest with you. So again, wild time to be alive. And I keep saying it, this year's going to get more and more wild. You really haven't seen anything yet. Believe me, we haven't seen anything yet. This year is going to be insane. So I think in summary, yeah, again, data is data, right? Data is what it is. But I hope you can see that elsewhere around the world, cracks are starting to emerge. So I don't think it's as simple as just saying, well, the data's fine, the US is okay. Yeah, it is, and the stock market's going up and whatever. But as I showed in the weekend's deep dive from 2 weeks ago, I think, it was either last Saturday or the Saturday before, I went through a bunch of recession indicators, and they're all flashing to say that we are going to get a recession sometime this year. Maybe as early as the middle of the year and maybe as late as Q4. But it seems like the recession is coming, and that still kind of fits into this narrative that we thought we would see a blow off top that would generate liquidity to let the big boys out, right? So that seems to be in play for now. Can they continue to grease the numbers and run this thing hot for a while? Yeah, probably. Could they even print at all-time highs and send this thing way, way higher because it's an election year? Yeah, anything and everything is on the table. But I think to say that everything's fine when it's clearly not fine is slightly misleading, or at least lacks a wider awareness, in my humble opinion. Moving on to Bitcoin, right, we're witnessing total acceleration of Bitcoin ETF inflows. In the first 20 days of trading, they did around 42k Bitcoin in inflows. But in the last 4 days of trading, they've done 43k Bitcoin in inflows. So there is a relentless bid under this market via the ETFs. And the IBIT ETF now has 5.45 billion in its spot Bitcoin ETF. That number was 4.7 billion only yesterday. So they're adding almost $1 billion USD in inflows just in one day. That is an awful lot. Bitcoin has never seen this kind of daily inflow. And if we can maintain this or anywhere near this, then nobody is bullish enough. We're even starting to see this reflected in the iShares ETF price chart. We're getting a big gap up on volume. That's not nothing. And if I pull up the IBIT chart right here, this is a daily chart. Not much data to go by, but you can see, look, all of that sell the news event has now been reversed. Okay, as of the open today, if we can close above 30, then the whole thing has been reversed. If I had to guess, I would suggest that we're probably going to do something like this over the coming days and weeks. I know Plan B, a lot of people for some reason have a problem with Plan B, right? But going back to the 6th of October, 2022, we were expecting the price to follow these red dots up towards the stock to flow model and then up towards party time in the upper right yellow box. Take a look at today, right? This is 2024, this line, and this one's 2025. So we're somewhere in this neighborhood and the price is trading somewhere in this neighborhood. So here's where we are, right here. X marks the spot. Not too dissimilar, right? Not too dissimilar. Probably getting ready to enter berserk mode. Again, a lot of people have had a lot of criticisms about Plan B. And personally, I don't really understand it. Because so long as we end up roughly in this neighborhood, then this model would have been pretty good. And so today, look, he says, so far so good. His view from 16 months ago has not changed one bit. The fun part starts soon. And if I click back into this chart, you realize this yellow box right here. This is the 100k line. So the bottom of that yellow box right here is 100k, and this is $1 million. Anywhere in this neighborhood, okay? And I think most people will be happy. So all we have to do is continue to do this. And again, this is the party zone right here. Every time this triggered as well, Bitcoin went parabolic and topped within 4 to 10 months. So while most are waiting for the halving, liquidity isn't. You know, I've shown this a dozen times as well. It's probably not really ever been about the halving. Much more likely it's about the liquidity cycles And as you can see, once liquidity entered a new cycle, so did Bitcoin. So far, so good. I had one more question that I wanted to go through before we touch on a couple of charts. But like I said at the start, there's not a great deal to do, right? You can certainly be your own worst enemy in trading when everything is long and strong and you start trying to add leverage or add positions or move stops around. You're just going to end up shooting yourself in the foot. So I won't be spending too much time on charts. Of course, we'll do a weekend deep dive. We're getting closer and closer to that. And we got the live stream tomorrow. So if anyone's got any charts they want me to go through in the live stream, we'll do that, of course. Crypto El Prez, what is my opinion on stablecoins? Now, I should preface this by saying I don't have a horse in this race. I do not own any stablecoins. I do not care for them. And these are basically the reasons. So the question was, if we're going to get a big bear market, if we're going to have a recession, if you're going to want to exit crypto, is stablecoins a good long-term hold, a safe haven during bear markets or recessions, right? Is that better than exit into the bank? And my opinion on this, and it is just an opinion, like I said, I don't have any stablecoins, they don't interest me one bit. But my opinion on this is they sound nice. It sounds like a nice idea, right? Oh, I can cold store my own USDT or not have to exit to a bank. I can just hold this on my cold wallet and then I still have self-custody. But as nice as that sounds, it's not without risk. Okay, these risks include, but are not limited to, things like depeg risk. Okay, the tokens can and do depeg, particularly in bear market times, during times of stress. We saw this with UST, right? The Terra Luna collapse. We saw that. That was supposed to be a stable coin. Next thing you know, it's trading at a fraction of a fraction of a fraction of a dollar. They also carry seize and freeze risk. And we've seen this with Circle and Tether. Okay, and if you just type in Circle freeze stablecoin, literally right here, the top result says Circle may also be required to freeze your USDC and or surrender associated USD held in segregated accounts in the event it receives a legal order. That's right under their own terms and conditions. So a lot of people don't know about this, but stablecoins, even held on a cold wallet, can be seized and freezed, right? You will not be able to transact. And this isn't just like in the worst case scenario, we have to write this into the terms, they would never do it. They have a history of doing this. PayPal stablecoin can be frozen like Tether and Circle. And like I said, they have a history of actually doing this. This isn't in theory they could freeze it, right? Circle and Tether have freezed over $65 million in assets. And if you go looking for this, you'll be able to pull up plenty of news articles and show plenty of examples where they have indeed seized and freezed people's stablecoins. So do I want to use stablecoins that can be seized and freezed? Not really. Is there any point in cold storing something that can be seized and freezed? Not in my humble opinion. There's also legal risk of government ban or something. Now, how high is that? I don't think so. I put low risk here, but it is still a possibility that maybe it gets to the point where these governments decide, you know what, you can't just rehypothecate your own dollars. And I know they're supposed to be backed, but there's always an outside chance the government decides, no, you're not having your own version of the dollar. And it would be a lot easier to pass a bill that says stable coins are now illegal than it would be to pass a bill banning Bitcoin that actually works, right? There's also risk of hack. Now, again, how high of a risk that is, I don't know. Probably not very high, to be honest. And the stable coins that remain now, such as Tether and Circle, they've been through a bunch of bear markets. They've been through a bunch of financially stressed conditions. During the massive deleveraging we saw in the last crypto bear market, everything was blowing up that was over leveraged, and Tether got through that no problem, even though everyone thought Tether was going to die. Everyone was claiming Tether was going to blow up because it was a ticking time bomb that was unbacked and unaudited. But the reality is it got through that. So likely it's doing okay now. Likely the risk of hack or depeg is probably quite low. But as I said, seize and freeze, do you really want an asset that can be seized and freezed, or that the government could just come out and say, we're not going to allow stable coins anymore? Remember, by nature, these entities are centralized, not decentralized. So thus, they do have a susceptibility to being banned. And last but not least, there's probably more that I don't know about because I don't spend a great deal of time. Once you tell me you can seize and freeze my stuff from within a cold wallet, I lose all interest. So that's my thoughts on that, okay? You do you, weigh the risks. If you want to extend your trust to a third party, then that's absolutely fine. You can do that. Outside of Bitcoin, nearly everywhere requires you to extend some trust, at least for a short period of time, to a trusted third party. And again, you can do your own research. You can weigh that up for yourself. So I hope that answers that for you. As I've said about 2 or 3 times now, there's not a great deal to talk about, right? Bitcoin, long and strong, still looks great, doesn't it? Still pushing up. Like I was saying earlier as well, the stock market, we had this big sort of scare, but we've held support pushing off now. If we can close the week above this red support, then that's really bullish. And in theory, there's still plenty of time left in this daily cycle. Okay, there's still a couple of weeks. The NASDAQ, holding support, looks good. So long as this can continue, we'll keep pushing the trades. And the Dow, is this breakdown retest looking for resumption lower, or are we going to get back above this trend line today? We're going to find out, right? So I'm happy to keep pushing this unless we start to see a big red candle, in which case we'll take the profit. But I always want to give us a little bit more space just in case what we see is this. So we'll see, right? We'll see. The VIX, we've had this big spike. Is this going to continue to be crushed? Every Friday they come out and short the VIX, right? So will this time be different? Probably not. And the Russell 2K, thinking about moving higher, right? This blue zone denotes this big range that we've got to get above. So it makes sense that we get hung up here. But to me, the thing looks like it's ready to do this. So that's good. That's what we wanted to see. Crypto-related equities, flying, aren't they? We're not going to spend too much time on these. They just keep going higher. So happy days. I didn't manage to get a second marathon position. So hopefully at some point we'll be able to find another place to add a position. But this just got way too far away from me, unfortunately. But sometimes it happens, right? There's no point chasing it. We'll just let this one go. And there'll be another entry at some point. Oil, is this the swing? Interesting, right? Interesting. Let's see. I'm looking for shorts, but you also know I need to find the right setup. Gold, I think, is working on a swing low out of this current daily cycle low. So hopefully a counter trend bounce that we can then look to short. Someone was asking me if we missed this short. I don't think so. Just think we need to give it a little space, let it have a few days, maybe 4 or 5 day counter trend bounce, and then we can look for a short out of that. And the dollar, wow, okay. Is that, it's probably too much hopium on my part. It looks really strong, I'm not going to lie. I want it to roll over. My yellow squiggle's been the expectation. But, maybe this is playing out. Maybe this is the deviation into CPI that I thought we might see. Maybe this resolves to the downside. That's what I hope. I really, really hope. But undeniably, all the while we're above this horizontal, this 104 and change, all the while we are holding above this upward sloping red support line, and all the while we're this late, this is quite a number of days now. This is 34 days of upside now. So the longer this goes on, the more significant it becomes. If we don't start to break down rapidly in the next 3, 4, 5, even 3 or 4 trading sessions realistically, if we don't start to break down the next 3 or 4 trading sessions, then this is going to be confirmed as a 3-year cycle low, and it would be unreasonable to expect new lows at that point. So we'll see, right? We'll see. So far, long and strong, continue to push, and we'll see what the market can give, right? So I hope you enjoyed that. If you've got the time, make sure you pop in and say hi in the live stream tomorrow. And until then, take care from me. All the best. Cheers. Bye.